I would like to indicate to you the overall context. The overall context is about the worst financial crisis ever, which hit the world in 2007-2008, and results in the G20 taking on some form of international governance. You're not yet a member of the G20. It may be from a small country not being part of the G20. It may sound a bit unfair that the big guys gang up together to decide on some common rules. But on the other hand, something happened, whether we like it or not, that's some form of global governance. After a few years, now we're 8 years down the line of the first G20 leaders meeting, which was held in Washington on the 15th of November 2008. We may find that the G20 did not achieve as much as one could have expected. However, on tax, for sure, this has been a success story. And while we see the world collapsing here and there, I mean, when you look at the world, the state of play is not really reassuring. But from a tax perspective, we've never had such a good global governance. We do have an unprecedented tax cooperation among all the countries across the world. We have been able to achieve very concrete things like putting an end to tax havens. And if 10 years ago I would have been asked, shall we see the end of bank secrecy in Switzerland? Shall we see the end of tax haven being used to locate all the profits of multinational? I would have said no, because we cannot do anything. And the G20 has been the demonstration that when you have a top-down approach, when you have political leadership, when you have some form of technical expertise available, you are able to achieve big things. And this is what is happening, and that's why we're so excited to share that with you. In terms of tax in the G20, before reaching BEPS, the first pillar, which was dealt with in 2009 predominantly, but there was some follow-up work, has been the end of bank secrecy. For those of you who are not aware or who refused to be aware, bank secrecy is over for tax purposes. In Switzerland, in Luxembourg, in Austria, in Singapore, in Hong Kong, and elsewhere, as soon as 2017, which means next year, and Slovenia being an early adopter of automatic exchange of information, what we call the Common Reporting Standard, you will get the information, your government will get the information on the bank account balance, on the interest, on the dividends, on other financial income, on all the transactions occurring on foreign bank accounts that you may hold. So if it is the case, my advice is please go and use the voluntary disclosure mechanisms which are available. But that's something which is true, which is happening. And why is it happening? Because in 2 steps, we were able to tell the tax havens, the bank secrecy states, that it was over, that the G20, representing 80+% of the world economy, would be taking action against these jurisdictions if they were not moving. Why so? Because countries are sovereign from a tax perspective. They want to protect their sovereignty. But precisely, if you want to protect your sovereignty, you cannot allow other countries to offer bank secrecy, which will result in you losing your money to this jurisdiction. So the sovereignty of some can undermine the sovereignty of others, and that's why we needed tax cooperation. It's a global environment, it's a globalized economy, high-earning taxpayers as well as multinationals can play worldwide, tax sovereignties are local, they needed bridges. And these bridges, to bridge the gaps between the sovereignties, we are building them. And that's why we ended up blacklisting some countries. They moved towards exchange of information on request, and in 2014, they all agreed automatic exchange of information as a standard. And we have the mechanism to check how they implement that. We still have some difficulties with some countries, Panama here and some others there, but all the countries are moving. Based on that success, And I remember in 2010, 2011 giving some interviews to media in Europe, in the US, and I was told, but you cannot pretend we put an end to tax haven. Look, in Bermuda, you have $2 trillion of accumulated profit of US companies, untaxed. And that has nothing to do with bank secrecy. And that was the other pillar. That was the other dimension of what we call tax haven. The dimension where you could book profits in a non-tax jurisdiction, even though you would not have any form of activity there, except some legal contracts signed allocating profit in these subsidiaries, where you had a trustee walking on the beach most of the time and once a year gathering a board, but with no real activity. And that's what we proposed the G20 to tackle in 2012. In Los Cabos at the G20 leaders meeting in June 2012, we, the OECD, proposed the leaders to tackle the issue of base erosion and profit shifting. This was mainly an idea we had in our mind. There was nothing concrete, but we thought we would have a few years to work on that. And you will remember that in November 2012, in the UK, there has been some turmoil and some media coverage of scandals like Starbucks, like Google, like Amazon and some others, which were proved not paying taxes or hardly any tax to the UK government while making significant profits on the UK territory. And that's where Chancellor Osborne contacted Minister Schäuble, contacted Minister Moscovici in France, and they said, well, we need to do something. And they realized that the OECD proposed something in the G20, and they told us, where I thought we would have 5 or 6 years to work on that, please do a report in 3 months' time. We did a report, and the report said, actually, we do have a problem. International tax rules, which were designed to eliminate double taxation to favor investment, have actually been used and abused to facilitate double non-taxation, meaning profits being not taxed in the marketplace, not taxed in the residence place where you have the headquarters, and not taxed where they are located, meaning in jurisdictions where nothing is happening and where there is no tax. And we said we need to address that, but we cannot fix it by changing one rule here or one rule there or doing that progressively. We need a significant, massive change at once of all the rules. And we have been working for the past 15 years on aggressive tax schemes. And we did have a database of more than 400 schemes. But you cannot close this scheme or that one, because then it's another one which appears. We had to go to the roots of the problem, and that's what our report indicated. The leaders of the G20 in Moscow in September 2013 told us, yes, good, so please implement your plan. 15 measures.